Pay attention, traders. This is an important week for several reasons, so stick until the end. I am still short and doing very well from the trade setups that I'm sharing with you. And I am looking for a breakout, like a burst, one more, in the markets to short, so I can set up the next section, which goes into the summer. First, let's look at what happened last week. Nothing. We had one red candle, a painful one, on Friday. You can see it right there. But 24 hours before then, we were at all-time highs. Regardless of what triggered it, do we really need to justify one red tick? I don't think we do. Because if you look back in December, we had a much larger red tick. We ended up breaking records. It felt like the end of the world. It sure did. Let's take the lesson from it first. Two pieces. Bulls. Let that be a nudge, a reminder to be a little bit less bullish. So reconsider being all in all the time, buying dips. And bears, this is not proof of anything different. This is not it. It's too soon to call victory. So what should we focus on this week? We have a bunch of Fed heads talking. I don't know what they're going to say. I don't think it's that important. The market may react here and there. The two important focal points for me. One is NVIDIA. In May of 2023, it launched the whole rally. It took the S&P and the NASDAQ with it on the AI this and AI that, and we ran to the moon. It has the ability to hit another gear higher or pull back on that concept. I don't think it will deliver a bad report, but what they say about future growth matters. The other one on the 28th, core PCE, and it's more important than GDP, which comes on the 27th. The PCE, I believe, the Fed already put the spotlight on it. So you can bet that the markets are focused on it. The CPI was bad. The PPI confirmed it was bad, and we had a rally off of that. That was crazy. Proof that the market is not necessarily reasonable. Let's look at the indices and the lines that matter. Not all the indices are on the level. We have the S&P and the NASDAQ in a league of their own, and then the small caps and the Dow in another league, much worse. I'm going to draw a reference to February 3rd, right in the middle of my screen, as a reference point. This is the S&P where we are at 600, well above February 3rd, which is around 590. Now, there is a chance, if they continue selling, that they're targeting 588 or so. I'm not calling for it. I'm expecting they're going to try to bounce it on Monday and Tuesday. We'll see how it ends up. It has support through 590 and some backup support if they lose that through 582. So they can handle a few more red days. On the bounce, I would expect selling, especially around 607. In fact, I think it starts at 606, 607 through 609. There's going to be a lot of selling there. Very close is the QQQ. February 3rd. In fact, this one is a little bit better. Apple held up well. So they have 522 support, 516 support, 512 support. And if that fails, through 505 and 502. So there is a lot of support on different levels. Now on the rebound, 532 through 534 should be difficult. You can clearly see the weakness in the IWM. That's February 3rd. They're well below it, so they already lost a lot of support. They do have backup support, but that's at 214. These are levels that I've mentioned all of last week. So they have lost all of them in one day. Now they're looking to hold at 214. If they lose that, they start selling rallies and they drift lower towards 201. 90 something, but that's a different conversation. Again, here on the rally, whatever we were looking at support, I believe 223 from memory and 220, then they become problems. I don't think 220 is a big problem, but 223 is. Now, this is the crazy one. It's the Dow, the DIA. It is crazy because one stock in it, Goldman Sachs, is massive. So you have to pay attention as to what happens to the financials if you're playing around with this guy. The rebound in the Dow is going to be difficult once it hits 441, 2, and 3. And this one also lost February 3rd right there in a big way. In fact, just looking at this, it should hit 429.28 for better support. I don't think there's good support here because it had been strong because of the financials. And now the financials, Visa, MasterCard, JP Morgan. These are large stocks inside the Dow, and it might draw them further down. Berkshire, I believe, is in there as well. So let's recap. We had one red tick. It's not the end of the world. Bulls, get a little more humble, please. Bears, don't start the celebrations yet. Don't spike that ball. We're not in the end zone yet. And look out for the hot topics. NVIDIA, Fed speeches, GDP, and inflation reports.